Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS method and BORSOG trading. If you're new, a very warm welcome and welcome back KS family, and please note I don't have WhatsApp or Telegram. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. As crypto technical analysts, we mark up our charts with the CTKS method first, and CTKS method version 2 is coming December 11. You're going to love it. It's an awesome upgrade. Tails, Let Me Know Barry and Beardy put together a little trailer for CTKS method version 2. Let's play it.
In a market gone mad, there was one man who wasn't afraid to say, "Let's run the numbers." CTKS version 2 coming to you December 11th.
How cool is that? Thank you all for that. It's just superb. In the last trading session, the main markets, they weren't happy at all. We can see the Dow Jones, S&P 500, Nasdaq and Russell all fell quite a lot, in excess of 1%. The US 10-year was up 3.5. The VIX was up, 6.8%. Gold was marginally up and Bitcoin was marginally up. Crude oil was down. We look at the main markets because we know Bitcoin cannot escape the stock market's gravity. And we can see the VIX starting to spike up. We've been waiting for this. When the VIX spikes up, what happens to the major indices? They come down. And we also saw the dollar gain strength. We're going to look more into the dollar and into the VIX to try to understand how far through this correction are we. You can see that gold took a hit and also oil was badly hit. We can see risk on sentiment coming out of the market because junk bonds are starting to lose their support levels. CTKS method version 2 covers ODMS, which is Objective Dynamic Market Structure. This is what these actual lines represent, these Stanfield levels. These are market structure levels formed from all of price action, and they're done a very, very specific way, using new advances in candlestick pattern analysis and candlestick charting. And what do we see that happened with the dollar? We know that the dollar bounced from this very, very strong institutional smart money buy level at 104. It bounced up to the 105.357 and it's now gotten above that. This could actually put in play the 106.998 because we can see that the dollar, the DXY, likes to bounce between major support and resistance levels. But of course, we don't just take one position. We must be open to what price action actually does. That's why we have our daily three-dimensional risk management code, and I go into this in depth in episode 685. The basic concept: how do you feel the market will actually move in the next 24 hours? And put a number next to it, run the numbers with me. And then that becomes the first component of the code. In brackets is your actual portfolio, how you think your portfolio will be hit if the market goes in the direction that you anticipate. And the most important factor, how synchronized in with the market do you feel? If you have the Midas touch or you're in the zone, that's one thing, but the institutions don't want you to be there. They're always seeking to desynchronize the entire market. That's why we focus on just looking at these SLs and seeing what price does when it reacts to them and keeping an open mind. We can see the major push that was put in through the SPY has all been retraced. You might remember back to here, this was Jerome Powell's speech on monetary policy, and we actually did a deep dive in the channel on that. And what did we find? There was no good news in there. What's happened? The market has just digested Jerome Powell's speech and found what we found 5 days ago. As a professional trader and investor, you always want to understand there's a lag between economic impact and what the markets do. The markets can move in the exact opposite direction to where the economics say that they should be going. So if we actually get a rally through these levels, that is on the cards. That's why we must do our daily three-dimensional thinking. The SPY is currently 393.87 and we can see some smart money levels, a resistance level at 394.72 and 396.66 and much lower support at 385 and 384. Where could the economic system head? A resilient economy could require persistent tightening, says an analyst. We already know this. We have a strong macroeconomic picture with the ISM Services PMI coming in hotter than anticipated. This is placing pressure on the Fed. Two of the biggest problems the Fed faces is persistent inflation in core, exacerbated by a tight labor market and resilient housing prices. But things are starting to cool off, but not in the timetable that the Fed wants. And what does the Fed want? It wants to see massive layoffs, and it's getting its way. Oh my goodness. And as I mentioned in yesterday's video and previous videos as well, as soon as the market goes slightly red, there's all sorts of hell breaking loose everywhere. Wall Street dragged by recession fears, S&P on track for fourth decline. These fear-based headlines are really good at getting eyeball attention and paying for advertisers, but the concept is, what are the markets really doing? When we look at the S&P 500, the 9 sell-offs and recoveries since 1966, we can just see that price is just doing what it does. It's moving in a wave. If it comes down to the 3790 level of the S&P 500 and it just comes up from there, we could be seeing an actual trend change in the S&P 500. It's also starting to show a slight trend change, but we'll just have to wait until that confirms. The real danger level is this 3577. Just bear that in mind. If we actually lose the 3577 mark, we could be in a lot of trouble. We look at the main markets because we must understand how their gravity impacts the crypto market. And an interesting article, man behind the iPod launches new cryptocurrency wallet. Crypto is here to stay. Even though you're going to read that Bitcoin is dead and you're going to see things like this, Cryptoverse, forget crypto winter, this is a Bitcoin bloodbath. We have to pay a lot of attention to Bitcoin because your beloved alts cannot escape Bitcoin's gravity. And when we look at the fear and greed index in the crypto market, we can see that yesterday's fear and greed was 26. We've got 25 reading today, so there's slightly more fear inside crypto. And why is that? It's because we saw this big sell-off. Why did we see a big sell-off? Because the crypto markets cannot escape the stock market's gravity. With risk on coming in through the markets with Jerome Powell's speech, and then risk off coming out of the markets as the markets finally figured out that speech was not good. But we knew that 5 days ago. I've just highlighted these lines to make it a little bit easier for you to read. Total crypto market cap is currently 806 billion. We have a smart money sell level crypto-wide at 808 billion and smart money support at 799 billion. The next major resistance is 840 billion. But we need to be aware, if we lose this 799 billion, the next major support is 707 billion. The CTKS method is unlike anything that technical analysis has ever seen. What would actually happen with normal TA? You would say this is an area of support at around 772 and this is an area of support around 738. But the concept is this is only recent price action. This is inherently biased. What you need is to understand objective dynamic market structure. And you also need to actually give weight to these different lines. What is strong, what is weak? The CTKS method will show you exactly that. On Bitcoin, we see a very, very similar pattern playing out. Bitcoin's price is currently $16,980, and when we look at the next level of support below, it's $16,649. Next level of resistance above is $17,425. We can see in the past trading session, the max pain level of 16,750 was not met, and we had a max pain level of 17,250 yesterday, but today it's 17,000. Just something to bear in mind. When we look at the longs and the shorts, and we can see the shorts are coming into the market, they're getting more and more confident because the economic news is pulling them in. This is also taking the longs out of the market. They're losing confidence. And why is that? Because there were so many long liquidations just recently. So let's check out the volume of liquidations. That's always important. And Masterclass students, you'll get my live chart in TG34. Total liquidations are really, really light, only 21.57 million in the past 24 hours across a meager 10,514 positions. That's just tiny. That's just like weekend, sleepy weekend. And when we look at total liquidations across the past 24 hours, about 57% have been long. What about the past 12 hours? 69% long. What about the past 4 hours? 83% long. And what about the past hour? Ooh, it's going the other way. 73% short. And this is what you always see. The longs and the shorts are constantly liquidating each other, but these volumes are absolutely tiny. It's really interesting. We've seen this before. Tiny, tiny liquidations, and then suddenly things start to heat up in either direction. And don't forget, the institutions want to put you on the wrong side of synchronization. That puts you on the wrong side of the trade and the wrong side of the percentage and makes them money. The CTKS method actually levels the playing field. You can see what they see. Turning to the greatest gainers in the past 24 hours, top 100, APE, EGLD, NEAR, Arweave, Axie, NEO, and EOS. The greatest losers in the top 100, Carver, GMX, Cello, CRO, APT, Osmo, and TON. We know that no alt can escape Bitcoin's gravity, and you can see that very, very clearly with Ethereum. As Bitcoin moved up, which is the blue line, you can see the blue line here. As ETH moved up, it was because Bitcoin was moving up, and when Bitcoin moved down, it pulled ETH's gravity down as well. And you'll see this playing out again and again and again and again and again and again. I just say it limitlessly. It's just the way the crypto market works. But you might say, hey Ken, what about that one? XRP didn't move up when Bitcoin was coming up and didn't move down when Bitcoin was coming down. Actually it did, but just by a lower percentage amount. Directional correlation confuses a lot of people. People think that it needs to be a one-for-one action. Bitcoin moves up 1%, the alts move up 1%. Honestly, if that was the way that the alts worked, we would just invest and trade in Bitcoin only. The alts give us much, much better return on investment than Bitcoin could ever do realistically. And why is that? As traders, we're looking for disproportionate moves like what Litecoin did recently. I'd like to point something out. This particular article from Reuters, Cryptoverse, forget crypto winter, this is a Bitcoin bloodbath. Followed up by this news, Goldman Sachs reportedly looking to buy crypto firms after FTX collapse. Institutional players don't think like retail. They want a bargain. They know the crypto industry is here to stay, but retail is not convinced at the moment because they're doing a very good propaganda war through the media. Strike partners with BitNob to facilitate cross-border payments into Africa. Warren Buffett always said, bull markets make everybody rich, but bear markets expose the players who didn't have any fundamentals to begin with. Court sets new deadline for Celsius restructuring plan. Michael Saylor on the FTX fiasco, unethical and illegal from the very beginning. And SPF, Sam Bankman-Fried, didn't just bring down FTX, he brought down a big slice of the crypto industry. Bitcoin clings to 17,000 as ARC flags historically significant capitulation. One thing to keep in mind, the crypto market is not divorced from the stock market or other markets. They're all interdependent and intercorrelated. There are many statistics that just actually point to the fact that we're in capitulation, and we're definitely in crypto winter. No question about it. How long we stay there depends on the main markets. And we're not necessarily out of the woods yet. Please have a look at LV25, midterm election volatility secrets you need to know. That's still very, very relevant, and you should be looking at that. As professional traders and investors, we need to be very flexible. Ethereum March 2020 fractal hints at a price bottom, but ETH bears predict a 50% crash. We know that ETH will follow Bitcoin's gravity. If Bitcoin recovers, ETH will recover. If not, it will go down with Bitcoin. So we need to keep very, very aware of how those SL lines are getting respected. In other news, Chainlink launches staking to increase the security of Oracle services. Animoca brand secures majority stake in music metaverse gaming platform through its latest partnership with Pixellinks. Bitcoin on-chain data shows 5 reasons why the Bitcoin bottom could be in. We need to be careful of on-chain data. On-chain data can be quite good, but yet it doesn't account for stock market activity, and it doesn't account for geopolitical events. We have to be very careful because markets are full of story-based analysis, or SBA. As professionals, we simply watch how price unfolds between different SLs. Warner Music, Polygon, and LGND.io partner to launch Web3 music platform. And the platform, Legend Music, is set to officially launch in January 2023. You can see the crypto market is far from deceased. It's actually really, really attractive to institutions. Remember the dance floor example. When retail is running away, institutions are running in just like firefighters, saying, yeah, I'm getting some really great prices here. This is awesome. And just looking at the next 8 top cryptos, we can see Solana starting to do an inversion on Bitcoin's gravity. We're really, really interested when particular alts invert on Bitcoin, because the majority will actually follow Bitcoin up and down movements, such as SHIB. And we can see the Tron is just basically obeying Bitcoin's gravity, but a very under extension there. And Uni is also obeying Bitcoin's gravity. We could see a very big overextension, but it's still following. It may not look it, but it is definitely following. And this is where directional correlation can mess a lot of people up, because they say, well, it's not exactly precisely following, so it's not correlated. That's normal correlation. This is directional correlation, something completely different. And let's have a look at Link. Link has actually broken through a support level. Link is a little bit under trouble. It's a little bit underwater. Atom moving in alignment with Bitcoin's gravity, but showing weakness. And what we can see, you can probably see it more easily here, Bitcoin has been finding a bottom. The fact that Link and Atom are selling down, and also Stellar selling down, that's not a good sign. Let's have a look at the SL levels on Doge. Doge is currently trading at 0.995. We have a smart money sell level at 1075 and support at 977 and 928. And please let me know, how have you found the CTKS method? I'd really love to get your feedback. And when doing the Stanfield levels, or SLs, On XRP, we can see XRP is currently trading at 38.94. It's got a lot of resistance, clustered resistance, which has been actually pushing XRP's price down between the 39.57 and 39.85 marks. It has resistance above those at 41.95, and the next real support levels based on objective dynamic market structure are 34.92 and 34.76. One thing that may save the stock market is actually Apple. And that sounds really strange to say, but Apple is a major slice of portfolios just about across every fund manager. And if you think about Berkshire Hathaway, just the proportion of Apple in its portfolio, you'll know what I'm talking about. And when we look at Apple's price post, it's 142.94. There's a lot of structural support underneath Apple's price that may actually turn the markets around. So just be aware of this. And congratulations again to Jaya Salan, who was awarded the Art CTKS Masterclass Partial Scholarship. And Art said, earning money through trading along with real wealth and positive excellence can literally change your family tree. My hope is that you will learn so much that you will be a blessing to yourself, those you love, and eventually be able to give back to help affect the life of someone else. Just beautiful, Art, and thank you for your kind generosity. If you have family or friends who could benefit from positive excellence and what we do here each and every day, please introduce them to our community by sharing a video. We'd love to see them here. We have one of the best communities on YouTube, and get well, Flamingo. We have a community of eagles, BORSOG eagles. In today's video, it would be really great to learn how the CTKS method has helped you, especially the line drawing. And thank you everybody for your kind comments. And Beardy, I knew Ken would carve up Tesla just like a bird on Thanksgiving. Thanks, Beardy. And of course, big congratulations to Jaya Salan. Happy studies. And good one, Dan. And good one, Mellow Cryptic. And well done everybody for popping in your BORSOG codes. We know we control the trader investment, but the market controls the return, and your active learning is always rewarded. If you feel a little shy and haven't commented, just reach out and say hi. We'd love to hear from you. And Tim said, thank you for your SL levels on Tesla, Ken. You're very welcome, my friend, and please let me know if anybody would like other stocks to be marked up. I'm more than happy to do so. And thank you, Jay, for your kind comment. I'm trying to actually cover more ground with these videos, including the news as well, but I'm still putting in the same amount of time, just getting up a lot earlier and going to bed a lot later. And well done to everybody who pops in their daily three-dimensional risk management codes, and you can see much more depth on these in episode 685. Remember, the institutions are always trying to desynchronize you. The fact that you have a go and you do your best speaks volumes about you. And the entire focus of those codes is to just get into synchronization with the market. And this is not easy to do. The CTKS Creed helps to prime our mind for profitability in all the markets. The Creed is all about positive statements that you say to yourself. Positive affirmations can actually be life-changing. It's very easy to think that this world is against us. But what you actually find as you put on and pile on the decades, the world is actually not against anyone. It just rewards hard work, dedication, commitment, and persistence. The world rewards people who do the right thing, and eventually people who do the wrong thing, things catch up with them. Such as Sam Bankman-Fried. So doing the right things and having positive excellence is one of the best life risk management tools in existence. And positive excellence is all about inverting fear-based thinking. Fear-based thinking puts scarcity first. It puts competition first. It puts aggression first. It puts conflict first. Positive excellence puts all of those things last. We know that through positive excellence, doing the right things will always produce the right results, and to go slow to go fast is the key. Positive excellence is one of the fastest ways to actually move into the professional realm of being a professional trader and professional investor. The CTKS first line, I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities and life reset daily. I am worthy, I go slow to go fast. I start small and scale with BORSOG. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. Stay safe out there, my friends. Take care and see you next time. Bye for now.